Everybody, Zakapa. Now, simple. Mm, I promise to show you how to draw the trend lines. I always insist on using higher time frame, top-down analysis. Okay, all the way from 1 year, 6 months, 3 months, 1 month, 1 week, 4 hour, 1 hour. At least it's good to have a picture, the whole picture. Just you know what is happening. So let me just take you through the trend lines. Uh, let's The trend lines are the most basic way of trading, but it's also the most complex if you don't know what you're doing. So you always look for the, the two touches or three touches consecutively. Like you see in this scenario, there is this touch and this touch, which consists of a trend line. Then the third touch is this, which suggests that this zone is a bit strong. But now, if you add to it the support and resistance, we do which one? We do the brown for the yearly, fine. So we have that one as our immediate. Then we have this one, second one. You see where the price now, the confluence between uh, yearly trend line and yearly resistance. They converge at the same place. This is a very strong area of selling. See what happened. So this year, 2026, this is what has happened. If you and we're going to look at it, this is the 2015, and around there, the highest price it went. It was 2070 around there. So that is just the higher time frame trend line. As you can look at it from there. So here I can just draw very simple. I'll just connect 1 year to another. If I just connect this year and that year, those are two touches. That consists of a trend line already. So we have two touches. This is year one, year two, we're done. Trend line doesn't have a lot of complications. We just need to understand what you're doing. So this is touch one, touch two, then give us a third touch, which is also acts like a resistance. So the same way we take our second and third touch right there, we do there. So 6 months, we choose a different line so that we do color coding as well. So with the can we do black, then we do a bit of thick. Now we just do two. So with 6 months, you can just see the same thing. That's a confluence. So we have 6 months and we have 1 year trend line almost at the same level. There you go. So I know that level suggests something. So on euro dollar, the other video we were doing pound dollar. So let's do red for the resistance of the 6 months. So there we go, and then we know there's a confluence here. So they have two levels at the same level. So I'll do 6 months and 1 year on the same level. That gives me a strong resistance zone. So this was a very good area of selling this year, January. So we have that, and then we have the 6 month support. I don't want to clutter my chart. Just need to put immediate support, immediate resistance. Next one is this one. So, and of course, once we have that, I'm good to go. I want to keep it very brief, and then we have 3 months. 3 months is very simple. As you can see, the chart now is becoming clearer, and then we have 3 months lines. So here we are going to have support and resistance of the same. So if you draw my support here, let me see. 3 months we said blue, right? I think so. So there we go. Let's do blue. So as you can see, the price stopped at this zone. So I know this black line represents the 6 month trend line and the dotted brown represents 1 year trend line. So I know the price is heading to a very strong level. So when I'm already prepared ahead of time, I'm not shocked. So I know when the price comes to this level, it's a matter of just acting. So we have that, and then we have a major resistance on 3 months, which is right here. Let me see. Uh, Here we go. 3 months level resistance. If you support, we just have immediate one, which is right here, and then we have here. But let me draw this one first. Most likely the price will come here. This is a very strong convergence. So this 6 months line is still to avoid clutter. We can see they are all speaking the same language. So 1 year, 6 months, same line. So let's see what happens to 1 month chart. Monthly chart, we have that as our, let's just squeeze a bit. Very good. So monthly chart, we know why the price reversed from there. Let's take a different color for the monthly chart, and then we do trend line before we do. So with the trend line, we can take one, two. So we have the upper line and we have the lower line. So since we are looking at the lower line level, let's just do one, two touches. So we have one, and then we have two, then we just draw. So we have already broken trend line on. There we go. So there's this progress happening as we speak. So we give it what? Magenta? Oh yeah. So we know that one is for. Very good. So currently, as we speak, the monthly chart is trying to break that level. Of course, on weekly, it broke long time ago because it happened here. So on monthly, we just draw the same trend line. We're just going to do support right there and just do the same color, which is what? Which is the same color, purple. Perfect. So this is where the price is likely to misbehave. So when the price comes down, we have this where the price just reversed from. You see here, this is not an accident. Two or more. Remember, two or more candlestick closing above a certain level. So these are two candlestick, and the rest of the candles are way above here. So this is where the price reversed from there. It's not an accident. So it broke the line, piercing the line, but now there's a support here, which is reversed the price back up. So gathering momentum. So if it's going to go up slightly just before gathering the momentum, they will find a resistance right there. So right there. So you have the trend line on this part. So it's very simple. As you can see now with the trend line level is giving us clear indication why the price is doing what it's doing. So let's do, what do you call this? You see what's happening as we speak? Aha. The price is going down after testing the trend line. You see, the trend was broken at this juncture. The weekly chart came and found a support right here. So let's see, what can we do? We can say the weekly chart. Weekly chart, we said what, green or something. So let's find out what happened exactly, and then we can judge. We did what, green. I think green will do. All right. So I know why the price came all the way here. So there's a confluence there. So there's a resistance here. There's a support here. And then when the price goes up, we'll find another resistance right there. You see this one? Yep, that one. So there's no price closing above it. And slightly above it, there is this. So that's why the price pierced through a little bit, trying to break this here. Okay. So already identify them, and then we have a trend line. Now, if we were to draw a trend line, we do a trend line from top to bottom, giving us that clear. Remember, one, two, three, perfect. So we just do green. So anything to do with green is weekly. Anything to do with blue is 3 months. Anything to do with the purple, magenta is what do you call this, monthly chart. Anything to do with brown is 1 year. Anything to do with black or maybe the 6 months is red. So you see the price has been. You can see probably what you're looking at is the other blocks and demand and supply zones. But I'm just giving you basic, simple trading strategies that are timeless, regardless of if you don't understand the rest of the systems. You can just use this because there's you can draw this as a channel, okay, and see if there's a channel. There's a way we used to do the channel. So most of these things I have books and I have books for them. I just have not shared yet with the public, but most of my students have them and they understand how to do the chart analysis top down. Now, if you look at that, now we go to daily. So we already have a trend line, then we have a weekly, immediate, that is here, right here, and right here. So let's do daily. Simple, no complications. Daily is very simple. As you can see, everything now is making sense. Okay, it's making sense. As you can see, where the price on a daily chart, it came and stopped exactly at 6 months trend line. Okay, right here is a very strong selling zone. So on 4 hour, it could have given us a very nice entry. And then I'll show you about the entry. And then we have that as our entry. Then the trend started going down. And from that time on a daily chart, the price has just been going down, 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 creating lower highs. So there was this high, then created a lower high, then a lower high, and a lower high, and a lower high, and a lower high, and a lower high. Just breaking and giving us lower low. This is lower low. This is lower low. Going down. So giving us a very strong downtrend. Okay, most likely it will continue further down. Now, on a daily chart, we have an upper. We can just say do black right here. I can see right there. If you just do black for easy, see. So one, two. So to avoid a lot of noise on your chart, so we have 1, 2 charts. So we have this weekly connecting all the way. So the weekly trend line is giving us an idea where the price is heading. So if the price breaks above this, next is here. So this is what we call free fall. See, this is free fall. So there are two candlesticks that are strong, but above it there's a monthly and 6 months and 3 months candle. So when the price was to come to this level, these are very strong monthly levels. Monthly level is just right there, and then I have what do you call this? Huh. Then I have that as my 3 months. Then I have this as my 6 months. Those levels very strong. So most likely the price is likely to come to those levels if it breaks this monthly trend line, weekly trend line, and then we have a weekly support and resistance right there. So if a full candle like this comes and close above it, most likely it's going to go and test these levels right there. So we don't have a lot of need to look at. So if the price breaks this, we're expecting the price to break this trend line on daily and go further down to weekly and monthly resistance or support, which is down here. So you might call this area of interest. So it might it may go past this level if you have to squeeze this market a little bit and find out where it's likely to head. So there's a 6 months level down here, which goes way back. So there's a zone here. There's a zone here. We're expecting the price either to continue further down if the market breaks this level. So we have a lower level down there. So this is how simple you can. So just do analysis, easy, no complications. Just go to H4. H4 is giving us an idea. So it's already giving us so we can just do this, connect the two lines, and then we are good to go. So we have one, two. So if the price break this line, this zone, already now we are in the downtrend mode all the way to this level. So there's no guessing. All you do is just wait for the price to come your way. So you don't chase the market. You don't react to the market. Okay? You respond, not react. There's a difference. Reaction is emotion. Responding is a logical action, backed by facts, backed by analytical point of view. Okay, so you're not reacting; you are responding to what the price is doing. So because you already know what if the price does this, we're expecting this. When the price does this, I will do this. So we're expecting the price to break out of this zone, either up or down. If it does up, you know what to expect. On a daily chart, I'm sure there's a resistance going on here. Let me show you. If I was just look at it, so we said black. Let's see if you have black. Let's do black on daily. We have right there where the price has been unable to pass through, and now currently, immediately, there is this here which the price has been unable to pass through right there. Okay, so we have those two lines. Those are support. Those are resistance for daily. And slightly above it, below it, there is this, and then there's. I don't want to clutter my chart with a lot of lines. I already see. So these are in the same zone. So there's no need of me putting another one here. So I just need to do this is my trend line, and this is my trend line. So if I was to draw a trend line on a daily chart, I'll just do this and just know this is my immediate trend line if the price was to come and pass through. So they're on the same confluence with daily. Okay, so they're the same confluence with the daily chart. So this touch line, this is touch one, touch two, and there we go. And then the price either goes above or below. So if I had to look at this market now from that angle, I already know it is either going to go up or down. And for me to come out of this clutter, it has to go above weekly and monthly. So what I will do, I will just shade this area as my area of interest. If I'm going to buy, I'm going to buy if the price come out of this shade. It must go above that level. Otherwise, this is going to be a lot of fight here. Buyers and sellers here. So the only way I'm going to know the buyers are in control is when their full candle comes and closes above all this clutter. So there's a monthly, there's a weekly, and there's daily, and there's trend lines. Once that there's a bull candle like this closing above all this, so the next one is just break, pull back. Then the next one will be the monthly resistance right there. If the price now breaks this monthly support on H4, so then I'm likely to see the price going all the way down here. So just have a look at it from that angle. So I'm not guessing. I can already see the trend lines gives me the current predominant trend that is happening as we speak. Okay, so the predominant trend right now is downtrend. As long as the weekly trend line holds, the trend is still down. Even if there's a minor pullback, it's still breaking the lows, but it's not breaking the previous high. So as long as this high holds and this high holds, the price is still going down. So this is just a minor pullback, then we're going to hold this trend all the way down here. If it breaks this level, so then I guess my next level will be here, 6 months. That is 12, 18. Otherwise, my first target will be 14, 17, and then there's a what call. There's what this there is. There's like 121 points, 131 points on Euro USD. You can do one lot and gets 1,200, or you can do 10 lots and do 13,000, depending on your account size. So that's it in a nutshell. I didn't want to talk much about the trend line. You can do channels. Channels are the most easiest way to trade, uh, because channels is like more or less like trend line. They give you a whole picture, so you can see this is a trend line within the trend. So this is a trend line right here. You know when to buy, when to sell. Like when the price was hitting the trend line, the support and resistance, where will you buy? I will buy right here when the price hit my support on monthly. Then I will have bought here, stop loss the previous low, and wait and take profit my next resistance, either monthly or weekly, depending on the grid level. And then the same applies here. This is H4. You can do H1. I rarely use lower time frames. Most of the time I'm always on this higher time frame. Okay. You can do lower time frame. Like here there's a very nice entry. See, there's a nice entry there for buy stop. Okay. Buy. Okay. So right now you can only say there's a buy if the price goes below, or there's a sell if the price goes below right here. Very simple analysis. So here will be have been a very nice entry for buy right there. And then there was another one here. If you are aggressive, see right here, there's another buy. See. So all these are just simple trend lines on H1. But we know our higher time frame is what guides us on what to do. Okay. So we know all this is happening. It's coming to touch the higher time frame trend line and going all the way. Okay, so this is a daily trend line. Okay, so it's hitting daily trend line and going daily trend line and going up. So we know the price is likely to either break the monthly support and the daily trend line, giving us confirmed confirmed entry. This I'm expecting. If the price breaks that line, it has broken support for monthly and daily trend line, either on H1 or on H4. Then I'll sell. And but TP1, TP2 will be around this level of 12, 14, and 13. Get the idea? Is that's how you just do simple analysis, top down. I hope I'm not that. I was not too fast. I just wanted to keep it brief. I'll show you how to do validation and invalidation in terms of time frame coordination in another strategy that I have so many strategies. We have ICTs, we have all these, but I'll just give you a simple analogy of trading. So combining all these together, so with those time frame coordinations, which is really very important to understand how the market works. Okay. So in a nutshell, I think that should give you an idea on what to do. So just make sure your trend line are drawn 1 point, just 2 points. Just make sure you connect 2 points. Like this and this consist of a trend line. So you don't have to do a lot of guesswork. Just take the recent two lines. Like you see, like here, there's a very simple way of doing it. The recent two highs are here. So you can take 1 and 2. You've already connected the trend line. So we have an earlier entry. Okay, so we have two, you have 1, 2, recent 2. They give you an earlier entry. So the price, but we have a higher time frame, which gives you even a second entry. You can always do this all day. I have a book that I've made for this. It gives you all this stuff. Okay, so in the meantime, just learn this basic stuff and try and apply them on your own time. You only pay. So you have a good one. Thank you.